light.
Yeah.
Well, hello, everybody. I'm Robert Joslin, the managing partner with Avasant, and thank you for attending the panel. And I'll let our panelists introduce themselves. Suzanne, if you'd like to start.
Oh, thank you. Thank you for having me. I lead a program at the NYSE that is called NYSE Board Services, and it connects, we have a network of candidates to board opportunities. And to date, we've placed over 50 candidates on boards in the last 3 years, and we do a lot of board searches. That's why I'm here today. You must be thinking, why is she here? I'm here because I did 126 board searches last year for our listed companies. So I have a really great understanding of where boards are moving. And ultimately, as you decide your strategy, as you decide what that is you're going to do with AI or your technology, you're going to have to go to the board to have them approve it. And so I'm here today just to share some ideas of how you can talk to the board to make sure that they align with what your strategy is, and that then you get the actual funding to actually move forward on your plans.
Chris Campbell. I'm with Ensono. I run our financial services business there. For those of you who don't know Ensono that well, we run legacy systems for our customers, mainly specializing in mainframe and infrastructure, but we also help with the digital aspects of it and helping them modernize, which is what we're going to talk about here today.
Vipul Nagrath. I'm currently a fellow here with Avasant, but most recently I was at ADP. I was a global CIO over there, corporate officer and senior vice president responsible for product development of our largest product in the company, over about half the company's revenue. And I have a lot of experience in the topics we're going to be talking about today from a very recent standpoint.
Well, I think it's still good morning. Rohan Ranadive with WisdomTree Digital Assets. I'm the Chief Risk Officer. WisdomTree is a traditional asset manager that's pioneering technology that brings in traditional finance with decentralized finance. And prior to this role, I was in various technology and risk management roles at Truist and US Bank.
Okay, and thank you. So, as we've talked about in multiple sessions and you heard before, digital really is table stakes now. So what we'd like to talk about is, a little bit of what's next, what some of the challenges are with modernization, because we're seeing right now modernization, implementation of AI, what that really means, what organizations are facing, and how they're addressing it. It's beyond just moving, either to the cloud, moving off of legacy systems, also capturing that next level of value and capabilities to the organizations, and addressing the challenges and the risks that come with that. So I'll throw it out to the panelists. And the first question is, what are some of the key challenges that you see with modernization and taking those next steps forward? Who'd like to go first?
Yeah, I could take a stab at that.
Absolutely.
Yeah, we see a lot of different problems, you call them, when you're facing modernization. In financial services, I think the first and major one that we all cross, right, is how do you unwind that monolith of a machine that you're trying to untangle and find out where all your apps are sitting, where all your systems are sitting, how are they touching each other? So I think that's something that we face across the board. And it's the starting point of where we need to decide how are we going to go after this project? How are we going to decide how we're going to modernize? And then I think secondary to that, one of the big things we look at is resourcing, right? And I think all of us talked a little bit about this earlier. And when I say resourcing, I'm talking about everything from the C-suite all the way down to the resources with hands on keyboard. You have the C-suite who puts together a program, funds it, puts it together, takes it to the board. These programs run 5-10 years long, and then the CEO's gone, or the CIO's gone, or the CFO's gone, and the project completely changes. It stops, and it stops again and again, and we have to restart the project, and we have to restart the project again. So I think that's a huge stopping point we face, us as service providers, when we come in and we try to implement a project with the constant changing of the C-suite. On the other end of it, I would just say, is with the resources, I think. We have resources that are hands on keyboard, their day-to-day job is to run these apps, run these systems, asking them to come in and now modernize these systems in ways where they might not know where it's going, they might not know the future state. Two, they certainly don't have the time, they have a day job, And third, where it ends up going might end up with their job gone. So the act of change in that is very hard.
Yeah, look, I would agree with what you're saying, and I think I'd add to it is that every company has a culture and has a DNA. And I think a lot of times we just get caught up in the existing culture and the DNA of the company. And certainly I can say from being in large companies, it's true everywhere, and it exists. I like Brian's framework yesterday where he talks about iterative or being iterative and being innovative. And I think one of the challenges that comes up is that, at least what I've seen, is that there too many of the projects are iterative and not enough on the innovative side. Yet everyone wants to have that innovation and they want to talk about that innovation, and that's how you're going to make that step change and you make that level change. But the reality is that we're just filled with a lot more of these iterative projects. But I think you can have a framework in there to help face some of these challenges. Most recently, what we came from is said, look, let's go focus on how could we use technology to address customer service? How could we use technology for sales enablement? How could we use technology to help developers? Then let's just take that technology and actually put it into our products for our clients. And then lastly, and I think this is the only place where you really get to that true innovation, and I would say today, go take a look at what your company does today. Look at all the tools that are available out there today, AI, non-AI, everything, and forget about what you already know. Throw that away and reinvent your company with today's tools. And I think you might have an oh crap moment and realize that maybe you're not as special as you thought and you can be displaced pretty quickly. And actually, I think that's a good thing because you should then realize where you want to make the real changes to innovate for your company and get that moving, or you will be displaced in the next 1 or 2 or 3 years or in the near future by someone who's using today's tool set and just creating what you've already done maybe for 50 or 75 or 100 years, but they can go do it much more quickly.
Mm-hmm. Rohan, your thoughts?
Well, I'll chime in. I think the biggest aspect of the change is having a good plan, and it's really planned in bite-sized chunks. Make sure what you take on is digestible. Make sure you've got clear metrics to show progress. Make sure you're celebrating the wins back with your team. And make sure you've got a good change management and governance process in place. And I'll add to that as we go into more of the risk and compliance aspects of it.
Okay. So following on to that, Suzanne, you bring an interesting perspective in your role too as well with some of the key challenges you're seeing dealing with boards, the board composition. Just generally your thoughts on what you're seeing, some of those key challenges, what can be addressed and what cannot be addressed right now.
Yeah. Let's just start for a second on just what is the board of directors? So it's 9 to 11 people that their key mandate is to hire and fire the CEO, to analyze risk, and of course maximize shareholder value, right? Average age of a board member is 64. That's been unchanged for decades. And your board chair or nom/gov chair or all of that is going to be slightly older than that. So 75% come from one generation. It's baby boomers. And there's a little bit like 20% from Gen X, and then it's 1% from millennials. And then actually, believe it or not, 81-year-olds or older still make up about 2%. So that's who you're dealing with great technological change. So the best boards, of course, are looking at, how is AI, how can we harness the power of AI to maximize value to our shareholders, transform our business? And then they're also looking at risk, right? So they're looking at how is this going to affect us from a regulatory, a governance standard, and all of that. So those are the best boards. But most boards, honestly, they don't really understand AI at all. Again, given the demographics I just told you, they really don't have an understanding of this technology. And so therefore, it's really hard for them to actually then move your agenda forward. And so what they asked me here today is to talk to you a little bit about how you can actually make sure that your plans and your strategy are going to go forward and that you bring the board along. And why does this matter? Because actually average tenure of a CEO of a listed company right now is 4.8 years. It's the lowest it's ever been, whereas a board tenureship is 10 years. Your continuity right now is with the board. So forging those relationships and making sure that they understand your strategy and your vision is key to your success. So a couple things I had thoughts on for you just to take back is, one is you have to really educate the board. Right now, there's very few board members or boards who are asking for people with AI technology in the background. Their general belief of a board is that it has to be an ex-CEO or a CFO, right? So what knowledge do they really have of what your vision is going forward? And so you have to really educate them. And you actually, yesterday, Brian Solis was talking about how you have to talk to them in terms of ROI. That's true, but you also actually have to tell them kind of basics of where you're going. Otherwise, you're never going to be able to enact what you're wanting to do. And then the second thing is you really need to have to talk to them about governance. That is what they do. And you're going to need to give them some governance framework on this because risk is what they're going to be looking for.
Yeah, I'd like to dive into that one a little bit deeper. Chris, maybe if you could talk about what, when you see, when you're helping clients look at that upward education and communication, socialization within the board members, what are you seeing? What's your experience there?
Yeah, so that's interesting. So I think it starts a little lower on the totem pole before it goes all the way up to the top. It's really educating. First of all, I'll give you a quick story, which I always thought is good, and it's really about business value. And I think you really need to find the ROI in when you're doing these legacy projects, because they're really tough to come up with. We have our head of digital, a gentleman who used to be the CIO of a large coffee company out of Seattle. I'll let you make that connection yourself. And he used to tell me the story about, he was responsible for the mobile app. He'd go in, he'd ask his boss, he asked the board for $30 million. We need to have it, hooked up to Uber Eats, all of these things. I'm going to add 800 million in revenue, and no problem. Here's your check. Go off. Here you go. But then he'd say his colleague would go in and say, hey, I need $30 million. I got 180 apps that need to be modernized. What's the ROI on that, right? And what does that look like? It's much harder for that gentleman to go get his money from the board than it is for someone who has an number valued return. I mean, I'm sure you must have seen it when you guys were trying to modernize and put these big programs together. So really starting at the bottom and outlining what those ROIs are, and we heard it again in the presentation yesterday, and coming up with what that value is, even if they're soft values and putting numbers to them, and you have to look for the long value. It can't be, we're going to get this tomorrow, right? Because it's just not going to happen. And then to your point, we need to educate the board that that's what we're doing, right?
It's interesting. So conversations really aligning with one of the themes that we've been talking about, and that is it's well beyond cost reduction, right? So it's been the additional value, the business value that the modernization, AI, all the solutions can bring. Vipul, your thoughts on this?
Yeah, so it is that. I'm actually going to slightly change it. One of the things we've also talked about, and I'm going to use the word patience. I think right now, and especially just in the stat you gave there, Suzanne, right, with a tenure of 4.8 years, I think patience is running low right now. So on the one hand, we're talking about all these great things we want to do, and those of us that are in it, in the trenches, knows that it takes time, right? These things aren't going to bake in overnight as getting the real ROI, as getting the real return, and to seeing the real return. So there's a little bit of time that has to be baked in, but the patience is low. So, you've got situations where teams are coming in, CEOs are coming in, they're trying to get something done, but they're not showing the result in 2 years, or they're showing results at a much smaller amount because there was these iterative projects rather than these large innovative projects. These iterative projects showed a much smaller result than expected. And then now their life is cut short, right? And then you're back to what we just said earlier is that, now 2 years later, you're going to spin up that same program again under new leadership, under a new name, right? So I just think we've got low patience, high expectations, and that's also just one of the challenges that are going on, and personally what I've experienced too myself.
Yeah. Rohan, anything to add to this?
Yeah, I mean, you go back to the board composition, as Suzanne said, and sometimes there's the CEO and the chairman is the same thing. and sometimes they're different. So education of the board is super critical, especially on key projects transformation. So I remember having a readout for the board in terms of very specifics, but a lot of the times the executives are also looking at how transparent do you really want to be with the board versus, how much can you actually share. You have to be careful on the other side as well, right? Board should not be acting in management's capacity. So there is a fine line, and I think as with most other things, like it's the relationship and the trust that needs to be built over time with transparency and trust.
So let's, you mentioned a key word in there, and so we're going to kind of pivot the conversation a little bit. Let's talk about transformation. So Ron, how do you see with transformation, with all the activities, the client's still managing and, managing the transformation, the risk, the compliance, and the concern, especially around AI in a lot of cases. It's something new to a lot of the organizations. They're still trying to figure it out. How do you look at that? And so what do you see some of those key risks and how they're actually managing the risk and the compliance as they go down that process?
Yeah, I'll give you the theoretical answer, and then I'll switch to a practical example. Theoretical answer is you do your risk assessments and you document your contingency plans, and it's a lot of paperwork and a lot of assessments and mitigation plans and mitigation strategies. You could use N number of frameworks. Consultants have made a lot of money just doing that paper and desk exercises. Today, actually, if you give your problem into any of the AI models, ChatGPT as an example, it's going to spit out a fantastic risk assessment. It's going to help you think through it. You can absorb it. Now, that's all theoretical, right? But on the practical side, any large transformation, it is all people-based, and it is all feelings-based, and it is relationship-based. So I'll give you the example of my favorite story, and I know it's a little bit before lunch, but it's Let's Make Breakfast. It's the pig, the chicken, and the monkey. So the pig, aka the bacon, is all in, fully vested in any transformation program. These are your change agents. They are just waiting to go. They get up in the morning for the transformation. Your chicken is sort of fence sitters, people that want to get in. These are your key stakeholders, your SMEs. It's up to the head of transformation, up to the executive team to make sure the stakeholders are absolutely in. And then you've got the monkeys, nothing but trouble. They're going to rip your tablecloth off when you don't know. There's mischief. There's going to be chaos. And the key through any transformation, and this is not in any risk playbook, is you've got to have strategies to keep all the three stakeholders engaged at different levels. You want to avoid the monkeys from damaging your transformation. You want to make sure you've got them doing the work that they need to do and ensure that they don't spoil the core transformation. And you've got to make sure your chickens are getting fully vested and fully into the transformation, and make sure that you're removing your barriers for the pig. So it's a simple analogy, but the biggest part in any transformation, I think technology is all there. Technology can be implemented at super fast speeds, especially with Gen AI today. You've got great architects, you've got great minds. It boils down to the problem about people in any transformation. So do not forget that aspect. You got to stay close to the people. You got to take the pulse. You got to have more town halls, more discussions, figure out what's happening, and then apply the right strategies.
Okay. Chris, any follow-on thoughts?
Just to follow on that, I mean, we see that in implementation projects all the time, right? You have these big, huge projects coming in, right? Lots of times they've hired, a big service provider to come in, and we've got your migration factory that everyone knows, and everything's feeding in, and we've got the 5 Rs, and everything's supposed to go in there and cut out. But what people forget about is that layer on top, right? That's the layer that you're discussing there, Rohan, which is really your resources that already exist, right? And what we found has actually worked in many cases is by augmenting these resources, by bringing other people in to help them. They're doing their everyday job, but it's hard. I mean, you look at doing a change on one application, and I mean, I'm sure you've seen it before. They've got to do a change ticket for the network, right? There's 100 bottlenecks along the way that get them in trouble while they're trying to implement these modernized change and what they're trying to do and get things into dev environments. So bringing in a team to kind of help augment them while they're doing their everyday job and kind of oversee the project at a higher level, that's above the migration factory, we've seen has really helped the teams and keep, your farm animals in order, right?
And as we look at transformation and balancing that, I'm hearing resources. It's all about the people. What do you? The other big topic of the day is obviously GCCs and Global Capability Centers to actually gain some of those additional capabilities. What are you seeing? How are you seeing clients really address that, and how is that really being adopted within the market to balance the the resourcing, the introduction of AI, and the additional capabilities too as well that they need to actually drive some of this innovation? So who wants to go on that one?
You want to talk from the service provider perspective?
I mean, I can talk high level. I mean, from my past experiences, opening captives, I think, is a great idea. It works in a fashion, but again, you still have the same staffing issues. You need to staff them up to a certain extent. You need to get the people in there. And then running innovation when they're all in one area you tend not to get out of it what you need. You usually need a service provider who can come in and understands managing those large groups of people, putting in place what needs to be done. And then, yeah, of course, I mean, Gen AI is everywhere, right? Adding into all those processes and streamlining that, I think it's a great way to go and a great model, but I just don't think companies can do them completely on themselves. I think they need the help of other service providers to come in and bring that level of skill they have had of managing these types of situations over years.
Okay.
Yeah, I can speak from the internal side of having brought in a service provider, right, where I really felt we had the right idea. Like, we knew how to execute this, we knew how to do it, and in fact, spoke to my boss about it, and I said, here's the bill I'm going to have to pay for the service provider to bring it in and help us, right? And he goes, do you really need to pay that? Can't you do it on your own? I said, here's the facts. Can I do it on my own? I think, yes, I can. The reality is it's probably going to take 3 to 5 years. If I'm bringing the service provider, I think you can get it done in 18 months, right? So even if it's nothing more than the service provider being the hammer and I'm on the hook to have that hammer kind of push things through, it's what was necessary and it's what was needed. And in reality, that's what happened. By having the service provider, having the outside entity, we came in and we were able to push through. Whereas if we try to do it entirely organically, internally, I think the road would have been much longer. And again, I think it's the high expectations, low delivery, and things just wouldn't have felt as good, right? When instead we had high expectations and high delivery, and it all came in 18 months. Then it was actually came in 15 months. Mm-hmm. Then it was really appreciated much more.
Mm-hmm. Yeah. Rohan.
Yeah, just going back to the GCC model and the use of Gen AI, I think one thing that I think many organizations have forgotten is your traditional systems of how you retain talent, how you promote talent need to be radically different in the age of Gen AI. What is being generated by a developer now, or what is being generated by somebody from an operations team, whether it's a procedural document, because Gen AI can do all of that for you. So your incentive systems for the staff, for your personnel, have to radically change in this new world. Your AI as a companion needs to play a different role where, at some time you might be incentivized for processing widgets or keeping an accuracy score of 99%, blah, blah, blah. All of that needs to be reevaluated. I think the HR organizations, I don't think to some degree have understood their role in terms of retooling the dynamics between the companies here and their GCCs and how that global war for talent is changing. I think Kevin hit on this in his keynote, right? The factor of the knowledge quotient associated with GCCs, especially in India and other areas, they're all up to par. And Gen AI is a leveler. It is, everybody has this access to the same information now. So how do you incentivize people to innovate, to do their jobs better, and not fear Gen AI? I think that's a big part of the strategy that needs to be incorporated.
Yeah, and the fear of Gen AI, it's with my role as in the BFSI space, one of the things that's happening now, it's becoming a little bit more prevalent, unfortunately, are deep fakes on videos, photos of, like in the P&C space, of accidents and things like that too as well. From a risk aspect, organizations either one, defending against that or being aware that AI is being used from a negative aspect too as well. Suzanne, are you seeing any of that coming from the board level or risk concerns from the board level there?
For the deep fakes and stuff?
Yeah.
I mean, so board's right. Again, they're looking at the risk. And unfortunately, what I see is most boards are looking backwards as opposed to forwards, right? So this is just how they're kind of hardwired. So, but risk is essentially what they're looking at. And I feel like they don't even really, because of the age, they don't really even understand a lot of the risk that you're talking about, like the deep fakes, right? So again, average age is 64, they're an ex-CEO or CFO. And if you think about it, how the board structure is, right? So you have to have you're mandated to have either an audit, nom and gov, and a compensation, right? So where does technology fit in on that? Right. Well, it usually rolls up into the audit and risk, audit committee. Well, who populates audit? That's ex-CFOs and chief accounting officers or GC or partners from big four accounting companies. And they're so focused on the audit, they're not really taking a look at all of this. And that's a really big tension right now on the board, is that they don't even know where to actually answer those questions. And that's actually where this audience really comes in, for you to educate them on that. And an interesting stat right now is that 84% of C-suite leaders don't think that their board has the capability to understand AI and technology disruption. But on the flip side, the board, which again controls all of that, 74% of them are not seeing the ROI on AI. And that's a really interesting tension there, right? Because if you're going to advance that vision, like how are you going to move that forward with them? And because they don't even understand that risk, because most of them aren't on social media, that's a big issue for them right now.
So on the, with the risk kind of aside for a second, on the ROI, how are, and Chris, so some of your clients and within your organization, how do you see clients basically looking at and evaluating the ROI on this? Because it can be difficult to monitor and track too as well, right? How do you see that happening?
Yeah, it's hard to do. There's many different ways to slice it, right? It depends on whether you're looking at long-term value and predictions in revenue and what's it going to do. But then there's other ways at looking at all the soft versions that comes in on whether it's go to market faster, whether you're making processes work quicker, and you can always put a dollar amount to it. I think you need to take the soft values you get out of it, right? Mm-hmm. That don't typically have a number, and get a number on top of that, right? I mean, this is for me answering to understanding a board that doesn't understand Gen AI, right? So, and then you need to put long-term values into it on what you're going to get in the long run, which is going to be your employee savings. But you have to put the whole picture together, I guess is my point. I mean, I can keep going on in points, but a lot of them are soft that you need to put values to, along with the long-term goals that you're going to get out of it, for sure.
Well, just sorry, I want to add to that a little bit more specifically. The way that, at least in my previous company, we measured it was at the project level. So, yes, you have the whole portfolio, and of course you measure the portfolio, which was consisting of 10, 20, 50, maybe times, a couple of hundred projects. We also went back and realized that we'd much rather like to have maybe a dozen large ones, or, 5 or 6 large ones rather than 200 little ones, because that was really death by 1,000 cuts. But it really had to be measured at the project level. And each one standing on its own, because each one had its own business case, had its own return, and you could see the year-by-year return, and then the long-term return, and then of course the whole portfolio gave you the full return.
Yeah, I'll take a slightly different pivot on the metrics examples, going back to your question on deepfakes, right? We see that in fraud. I'll give an example. This was the first time I was entering the U.S., transitioning through Miami, and I hold global entry, and they kept saying, keep walking, keep walking, keep walking, and I kept walking out. So the technology now, at least at the Miami airport, it was about a month ago, is so clean that it didn't stop me, and I walked away. So if you start thinking about that into your onboarding experience, right? How do you make it frictionless? How do you make sure that you can ID the person through a selfie, and these selfies that they create, deepfakes are making it so difficult. So you've got AI on one side trying to fight AI on the other side, trying to identify fraud, right? So you start looking at now, this is the new realm of transformations. This is where, going back to your ROI, this is where you need to quantify ROI very effectively, right? You can't have 100, 200 people checking because human eyes are not going to catch the difference. I've actually got this for laid out for my next risk committee is to stop see if you can spot the false identity, and they look all so real. So you require AI. Humans can't do it. I mean, the naked eye cannot identify, especially if those are deep fakes.
So as we look at that, what would you, just general to the panel, what approach would you actually recommend to any organization facing these challenges right now? How do they start? Because a lot of organizations are still at they're step one of a 1,000-foot journey on this, so to speak. How do they get started on this, and how do they go down this path, managing risk, managing the transformation, managing the impact? Any thoughts on that you'd recommend about where to start and how to start?
I think you just have to start.
Yeah.
I think if you get into analysis paralysis, that's a problem, right? Even if it's not perfect, because especially if it's your very first time doing anything you don't know. So just start. Be curious and start, and you'll learn, right? Who here can raise your hand and saying that every project that they've ever done has gone perfectly? I mean, if anyone does, I'd want to talk to you. Be a little bit surprised, right? I know the mistakes I've made. And I've had successes and I've had setbacks, and I'm glad I actually faced setbacks early on. Had an idea, tried it, and it flopped. Learned a lot, made a shift, made a change, and then found a formula, a recipe that worked, as opposed to continuing down that path that didn't, but you just had to start.
Okay.
Yeah, I would agree with that. That analysis paralysis that is not the way to go. We've got into so many customers where, they've asked us to come present a plan, and they already have 7 more that they've already looked at, and they're all different in different ways, right? And it's where do you start, right? Where you just need to get in there, start it, and like you said, learn on the way, right? You'll learn it and you'll start getting it, because again, then you're up against it. If you've got a budget, you don't know how long you're going to have it for. That next CEO could be gone, the very next week, or the board could change it, and that money could be gone. So I mean, you just need to start these projects.
Mm-hmm. I do agree with that, but I do say you do have to be very clear with that management, whether that's the CEO or the board, to be able to continue. And because of the gap in knowledge, you're going to have to actually probably spend more time on that communications to actually see it through. And if you do fail, remember that's what boards are looking at, that risk. You're going to continue to tell them why and explain that to them, because they're looking at regulatory and all of that type of coming down on them. So I think you do have to start, but you actually have to really communicate that to the ultimate decision makers very clearly. And I mean, I hate to say it, but you have to really dumb it down to make them understand it, because otherwise you're just never going to get the buy-in that you need to actually have transformation.
I know we're about at time, it goes fast, but any quick closing remarks, recommendations, other than the get started and almost a variation on the fail fast model, but any quick comments or closing remarks?
Robert, I've got one. Know your customer, know your vendor. I'll say know your stakeholders. Pig, the chicken, the monkey. Just keep that in mind on any transformation.
And I'll just add to, while starting and continuing on from here, and time box it, right? So it's not just about start with an unending goal, it's time box. Personal formula that I've followed, and I got this statistic, I think it's from McKinsey, it's like projects that are scheduled for 2 or more years, something like 96% of them fail, right? So if you want success, first you got to make sure that no project's going to go, like you can't set it up for more than 2 years. Right. So I set my marker at 15 or 18 months. And if I'm not seeing the results in 15, 18 months, I mean, and you're iterating in that, but you're setting it the 18 months, because if you're going to go 2 years or more, you're pretty much doomed for failure from the beginning. So it's just start and keep it time boxed really quick.
Yeah, and just to add to that, I think they're all strong points. I mean, having clear goals on where you're going and what you've decided to get to is really important, and bringing in the right resources. Don't think the team you have on the ground can do all the work. Make sure that you bring in people to support them.
Suzanne?
I mean, I'll reiterate, stay close to your board. Even if you don't have the opportunity to, make sure whoever does is very well informed. Ultimately, your success will depend on whether they have buy-in or not. So being really clear with the board, because remember, the continuity right now with most companies is with the board, not necessarily the CEO. So making sure that you forge those relationships and or the other person forges those relationships so that you can actually continue on.
Yeah.
Well, I think with that, well, I know we're at time, and I'd like to thank everybody for the time today and the conversation, and definitely appreciate it. Thank you.
Thank you.
Thank you.
Thank you.